This video is for you if you are currently a seller that is not a US citizen or not a green card holder and you're selling a home, or if you are buying a home from somebody who is not a US citizen or not a green card holder. What I'm going to do is explain very, very briefly and try to be very simple about this. I'm going to explain FIRPTA. FIRPTA stands for the Foreign Investment in Real Property Tax Act, and I'm just going to explain what this means for you. So there's a couple of definitions, first of all, and the first is foreign. And what we mean by foreign is anybody that is not a green card holder within the US and anybody that is not a US citizen. So this does apply to E1, E2 visa holders. There are quite a lot of E1, E2 visa holders within the US, and this does apply to them also, but there may be exceptions. I'm just going to say maybe. You really need to check with your accountant because it really depends on something called substantial presence here within the US. So it may apply to you. Now, what we mean by foreign then is anybody that is not a resident of the US at the moment, that we can take that as read. Real Property Tax Act. What this also means is that the IRS are safeguarding their investment and their tax, and they want to make sure that they are getting the right amount of tax from any home sale. Now, we all know that second homes and the selling and trading of second homes is going to be subject to a capital gains tax, and so the IRS wants to ensure that that tax is paid. So it is applicable to you if you are selling a home, if you're a foreign investor, or you are buying a home that from a foreign investor where the sale price is over $300,000. Now, there are exceptions at the sort of the top end of the scale when we're talking about millions, but what I want to do is sort of put a disclaimer in here is you must talk to your accountant about this for more information. What I'm going to do is just give you a quick overview so that you're not caught unawares, because that happens to a lot of my sellers, unfortunately. They are caught unawares by this and it comes as a little bit of a shock to them, and so what I want to try and do is just ease that shock. So if you are selling a home for $300,001, then it applies to you. If you are selling a home for $299,999,000 and 1 cent, then that's fine. It doesn't apply to you. So 300,000 is that threshold. And what it states is, and by the way, the responsibility is on the buyer here. And there's a reason for that, because obviously the seller is in a foreign country and therefore the seller cannot be held accountable. The responsibility is on the buyer. And what it means is that when you sell a home or when you buy a home from a foreign investor, 15% of the proceeds must be withheld and must be made payable to the IRS, or at least held in an escrow account that the IRS has recognized. And it's up to the buyer to put that 15% in there. So the buyer, if you're selling your home, the buyer is not even allowed to give you that 15%. And if you're buying a home, then this is your responsibility. You must realize that you have to put 15% of the proceeds from the sale into this escrow account for the IRS. It's your responsibility, and it's your responsibility to ensure that you do this within 20 days of closing. You must file Form 8288 with the IRS and submit that 15% into that escrow account within 20 days of closing. So what this means then to you as a seller is that you're not going to get your full amount, the full proceeds from the sale of your home if you're selling your home for over $300,000. So let me give you an example. Let's just pretend, because obviously, it's easy for me with this accent. Let's just pretend that I'm a British investor and I have a vacation home here in Orlando and I sell it for $301,000. Just how much am I going to take home at closing? Right, well, I can tell you now that the buyer is going to withhold $45,000 or just over from that closing. Then I'm going to pay $18,000 in realtor fees. That's assuming that I have both a listing agent and a buyer's agent as well. Then I'm going to have prorated property tax and HOA fees to pay as well. I'm going to have a settlement fee, which is around about $600, and I'm going to have title searches, and I'm going to have insurance, which again is going to be about $2,000 that I'm going to have to pay. And then lastly, I'm going to have stamp tax to pay, which depending on the county that I'm in, is going to be around about $2,107. Now, I just want to point this out, that this is not just something that's relevant in Florida. This is something that is applicable throughout the US. So this is a federal tax withholding. It's not just about Florida and vacation homes here in Florida. So what this means is that if I'm selling my home for $301,000, then I'm only actually going to take home at closing $233,000 minus my taxes. So probably around about $230,000. That's not to say that I'm not going to get any more money from the proceeds of the sale. I probably will, but that's really down to my accountant. My accountant must file my taxes must be paid, and then the IRS will issue me with a refund for any overpayment. So if you're selling your home for $300,000 or $301,000, then you are only going to take home at closing around about $230,000, and you will get some back once your taxes are filed. All right, that's not guaranteed. I shouldn't actually say that you're definitely going to get some back, but depending on how much tax you owe, you should expect to get some back once your taxes have been filed. But again, the responsibility is on the buyer. So if you are buying a home that has been previously owned by, or is currently owned by, a foreign investor, then the responsibility is on you to withhold that 15%. And that's something that you need to talk to your realtor about. So what I would recommend for either of you on either side of this transaction is that you get a good realtor that understands foreign investment, that has worked with FIRPTA before, and that is fully cognizant of everything that needs to happen. Because they will ensure that you have a title company as well that is fully cognizant of everything that needs to happen. Ultimately, you're going to have to speak to your accountant as the seller. As the buyer, just allow your realtor and your title company to direct you in what you need to do and where that money needs to be paid. Because once that money has been paid into that escrow account, the home is yours. So as a buyer, you have no further obligation. As a seller, of course, your obligation doesn't end until the IRS have given you any refund back. If you have any questions, then please come back to me. I am on Facebook at Joe Peacock Realtor. You can also reply in the comments here, or you can give me a call on +1 407 409 3683. And good luck with your home purchase.